If you owned the Kospi last year, it soared 77%, boosted by the AI trade. A lot of that, as we've talked about, two major names like Samsung, SK Hynix. But major reversal this week. Amid concerns about the economic ripple effects of the Iran war, the Kospi is down 18% since Monday, though still up 21% this year. Seema Modi is at the New York Stock Exchange with a look at the sell-off and the fallout, Seema.
Kelly, this historic move that we've seen in Korea's stock market is directly linked to what's happening in Iran. As Goldman Sachs notes this morning, Korea is the most oil-sensitive country in the region, with a high percentage of its imports coming from the Middle East. So that's pushing investors to sort of take some money off the table. It does follow a massive rally, as you just alluded to, as valuations of AI companies in the U.S. started to get rich in the fall of last year. Investors started to look for AI picks and shovels names in Asia. And Korea has been a favored destination, housing two powerful memory chip makers, SK Hynix and Samsung. With this year's gains, these two companies now make up about 50% of the MSCI Korea ETF weighting. Now, putting this big sell-off into perspective, Kelly, South Korea is still up about 40% this year. That is the widest divergence with the Nasdaq in 17 years, according to CNBC analysis. JP Morgan strategists still see this as a favored market to own, pointing to structural reforms and earnings revisions, but they also acknowledge that these stocks in Korea will remain sensitive to the developments in the Middle East.